Hi, everyone. My name is Phil Blancato, and I'm CEO and President of Ladenburg Asset Management, Chief Market Strategist for Osaic. Welcome to another weekly Market Impact. Today's fun. This in 2026, I want to have many more guests on. I think you all have told me you like the guests. I'm working on my speed. I'm trying my best to not talk too fast. Although you want to laugh, for all the thousands of people that listen to this podcast, I literally had someone call me up, write me an email, my buddy Dave, and say, I like the way you speak. Don't change a thing. It's Jersey speak, so I got a kick out. I got one on the pro side, but I try to be more careful with. Sometimes I get a little too fired up and get carried away. Well, obviously you've noticed the turmoil in markets. So before I get into I guess I got to talk my weekend for a minute now, and I'll ask the guys what they did. So just it's always fun to open up with something fun. I got to go skiing yesterday. A very good friend of mine, Chris Shanley, local Nutley guy. He played football for Temple University back in the day, D1 football player. He's a very big guy. We never got to ski together. For years, we've been talking about it. So we said, what the heck? And we went skiing up at Platic Hill Mountain, New York. A little soft, but we had a darn good time. It was a lot of fun. So hats off to my buddy Chris. We've been talking about doing it forever. He's a damn good skier. So we had a great time. I think I want to come back next life as my daughters. My older daughter is in Mexico. Now, in fairness, they pay for this stuff. I don't. We do support a little bit. Now we usually meet them halfway on this stuff. But she's in Cabo with her friends for her senior spring break. Not bad. And the other kid, and again, I give them credit. They find ways to do it on the cheap. She landed in Marcella landed in London yesterday, and then hopped a flight to Spain, where her very good friend is studying abroad. So she'll stay. For her and a couple girlfriends will stay in Spain for a few days, and then head over to London for a few days, and then back home. Not bad. Not a bad life, Good for them. Not bad. What'd you do this weekend, Ben? Anything fun?
No, nothing too crazy. I had a friend's birthday on Saturday, just a little get together out at a bar, but nothing crazy.
Jersey has a big St. Patrick's Jersey. Nutley has a big where I live has a big St. Patrick's Day parade. It's one of the earliest ones going. So that was this past Saturday, and boy, did these people get after it. I'd never been a guy who drinks a lot, but I went to a bar for a little while after with my wife. She wanted to go out. And man, they get after it. I don't see the fascination, but woo, not young people either. Some a little bit older. What about you, Aidan? What did you do this weekend?
I decided that winter was officially over, so I took my snowblower out and washed it, and just put it back in the garage and put a cover over it and let it marinate for a whole nother winter, spring, summer, fall. Don't want to see that thing again. We've
I
had
have
way
bad
too
news for you,
much
buddy.
snow here in Massachusetts.
I get bad news for you. I looked at the weather forecast, the end of next week. You're looking at mixed snow and ice and maybe snow in your area. So you might have got ahead of yourself.
Nah, no, we're good. It's all over.
Okay.
Um,
So it says you and the groundhog. I've had Aidan and Ben joining me. You've met them from other podcasts. Ben, one of our CFAs on staff, and Aidan, one of the CAIAs on staff. They're both going to talk about recent white papers that they wrote. So I'll get to that in just a minute. That's why they're joining me today. Obviously, I got to start off with the conflict that's happening out there. When you think about where we are, I mean, let's just keep it to the facts. I like, me, I'm always about the facts. During COVID, that was our whole mantra. And when you look at markets right now, there's not a lot of stress in the market. So, for example, the S&P 500 is now down on the year, 1.32%. The highest it ever was on the year, if I'm not mistaken, was about 2%. I don't think it broke two, maybe 2.5. So, in the context of a bear market, we're near a bear market, which is classically defined as a 10% correction. So, we're not near that. 5% corrections, which you could sort of call this one, are very normal. You get three in every single year. A 10% correction is actually very normal as well. They're good. It's kind of like a brush fire. You want to take some of the excess out of the market, some of the extra folks who are getting a little bit too aggressive. The Dow, which was doing very well in the year, is now down 0.86. You know what's not down? Small cap stocks. Still up 2% on the year. Large cap growth because of the software, because of Anthropic and all the news around what AI may do to these classic tech companies is down almost 5.5%. Large cap value, however, up 3.59. That's a pretty good number. And actually, for the week, large cap value was the biggest loser after small caps, which were the biggest loser, down 4%. And it's mostly because they were up so much. Now, what really got hit hard was international, down 7% for both EFA and EM. But still on the year, up respectable. Emerging market stocks up 2.7. And the big winner, I'm sorry, international developed stocks up 2.7, and emerging markets still up 7% on the year. Again, the biggest winners were the biggest losers. That's very normal in a market sell-off. So nothing really to panic about. And here's the other piece of good news. The bond market. We're up 0.77 on bonds. Now we lost almost 1% last week, but we're still up on the year. So a balanced account is doing quite well. It's really not a concern. So when you look at what's happening in markets and you're watching these kind of daily gyrations of people buying the dip, and why is the buy the dip happening? Because you haven't had a profound sell-off. You see a lot of headline news about this war. Well, first of all, so we know the Iranian defenses are being degraded daily, and whether or not they have some bunker of significant more weaponry, which is something I read over the weekend. I'm not sure that doesn't seem to be the case, because at this point the bombardment is quite significant. I don't know that we've seen anything in recent history like this. Go one further when you think about where we are from the end game, and that's the hardest part. Actually, seeing the former Ayatollah's son being nominated as the next president suggests that this isn't going to end peacefully. It's either going to be regime change, because this person is a hardliner. I don't have his name in front of me. He's either a hardliner or more of the same. In other words, we don't see a success story come out of this. But just some facts I want to bring up, and some of these I put together, and some of these Ben actually sent over a piece, and I'm going to have Ben read a piece about a research firm that we use that had a really interesting point of view, which I tend to agree with. First off, the counterattacks as of this point have hit all the major states: Saudi Arabia, Qatar, Kuwait, Bahrain, and Oman. That's a terrible move by Iran. I know they're trying to hit soft targets, American targets, but the reality is all those countries are now on the brink or are already fighting against Iran. So you have this piling on moment where other countries are actively going after Iran now. And not to mention, most of the European countries are there to offering some measure of support. Maybe not what the president wants, but certainly some of it. The U.S. and Israel have now struck 130 cities, 3,000 targets. That's incomprehensible. Just think of it this way: that's the most. That is more targets in this period of time than the 3 months of the Iraqi invasion back in 2003. So significantly more than what we've done in the past. And at that, this is even more geography than we've covered in even World War II. The U.S. has sunk 20 Iranian warships. So this idea of the Strait of Hormuz, which is all the talk about whether or not oil is going to flow through or not, is I think much less of a concern. It's still a concern, but with sinking of all their warships, that's made a big deal. One Iranian warship sunk off the coast of Sri Lanka, 2,500 kilometers away from Iran. So the United States is going after these ships wherever they can. The Strait of Hormuz, which is essentially closed, it's cut off 1/3, well, depending on whose math you believe. I read a piece that said 19% this morning, up to as much as 1/3 of the oil supply globally. Now, this has sent oil to $100 a barrel. In fact, for a brief moment last night, I was watching this. It hit 119 a barrel, came down to 100 before the stock market opening. And as of this moment right now, Aidan, if you would check for me, I believe we're in the 90s on oil. So the conflict between the two obviously is not done yet. U.S. depleted 25% of the entire globe's THAAD missile system. So that's what we use to protect the incoming mortars. So we still have plenty there, and I have the name now. Mohammad Khamenei, excuse me, not my strength here, was appointed as the new supreme leader. Well, my point is, all these points suggest that it's still an active war. We're still not out of this. It's still very much part of the headline. And when you think about where we are from a headline scenario, there's no doubt that this is creating turmoil in the market. But even in a day like today, why is the buy the dip happening? Where today we're only down 300 on the Dow, we were down 900 before the open. We're down 17 on the NASDAQ and 15 on the S&P 500. These are not big numbers, because the expectation is that there's an end here in military conflict. And more importantly, the oil issue will be, at the end of the day, it's king oil. The oil still matters. Whether it's, I'm sure you've all paid more per gallon. I paid $3.17 in New Jersey this weekend. I paid $2.55 3 weeks ago. So that's a significant jump. I get a little bit of a kick out of this. Where was all the euphoria when oil prices were plummeting and gas prices went straight down? You saw none of this in the headline news. And now there's this gigantic calamity about, oh my gosh, oil prices have skyrocketed. Wait a minute, let's just go back a year ago. And what happens in an environment like this is those who are wealthy, those who can afford gasoline, are probably not affected by this. Well, here's the key. We live in a K-shaped economy. And in a K-shaped economy, the wealthy are stimulating. Will the wealthy slow down their spending because they pay an extra 50 cents for gasoline? I don't think so. Will airline prices go up by probably 15, 20% because of jet fuel? Probably. Will that slow down some of the airline? Maybe a bit. But at the end of the day, will this be so significant? It hurts for the person who makes less than $100,000 a year for sure. But where the bulk of the economy is, the bulk of the spending is not the person making 100,000 or less, the person making 100,000 or more. And those folks, we know because of a raging stock market over the last 10 years, asset prices of their homes being higher, are in very good shape. So I'm not, this isn't a bear market. This isn't because we're having a poor earnings cycle. We're not on the cusp of a recession. We did get some bad data on labor. We'll get inflation this week. We expected the jobs market to be much better last month, adding 50,000 jobs, and we lost 150,000. Net effect of negative 190,000, 190 person swing. The unemployment rate ticked up to 4.4%. But inside the numbers, there were a number of strikes in the healthcare system. There was some recalculating of the data. We won't let 1 month be a trend, but it certainly wasn't a good number. Let's not kind of be Pollyanna about it. But weekly jobless claims and continuing claims actually still look pretty good, up a little bit, but nothing significant. So I guess my point is this isn't a recessionary environment. Could it become one? If oil stays above $100 a barrel for a prolonged period of time, we have a real problem on our hands. And that's not the case. That's not where we are right now. The expectation is this thing comes to an end, at least militarily, and we get a straight open sooner rather than later. Ben, what was the report you picked up on this morning?
Oh, thanks, Phil. Yeah, it was a piece out from Ariel, and frankly, their base case is actually um, fairly encouraging. They're looking at, Iran's, as you mentioned, Iran's offensive capacity being sharply reduced, and that apparent miscalculation on their part to attack regional neighbors, soft targets, and in an attempt to try and limit oil production or the amount that can flow through the strait, that's really kind of turned on them. And now the U.S. and its majority global allies have turned, together against Iran and are looking for a rapid end to this situation. So, that is a relative positive. It seems like the regime has prioritize survival over escalation, and that has, kind of united the world against it.
One of my most unique stories, and I think Ariel's right, by the way. If you ask me my base case, the military power of Iran, excuse me, of Iran, yes, versus the United States and Israel doesn't seem to match. I'm going to have Aidan talk about this in a second. Eventually, you would assume that we will win this out. Now, whether we can do this without boots on the ground or not, that's we'll see. I hope not. Hope that's not the case. The seventh American service member passed away. Although I believe one of them was non-military related. It was a health issue, but being caught up in this incident for sure. When you look at where we are, you would assume that we can win this thing, and that's why my base case is oil falls back down because the strait gets reopened again. But you have to ask yourself, is it worth it? Is all this worth it? And in the end, personally and economically. Personally, do I think it's worth it after 47 years of what we've seen happen there to the people who live there? Give you an economic point. Their currency is down 99% from where it was when this started. How do you look at that and not, feel badly for the Iranian people who have been living in poverty when they don't need to? It's a very oil-rich nation, and not to mention a very educated nation. So it was funny because I saw two things over the weekend that really shocked me. First one was Jon Stewart did a piece where he had an Iranian author come in and tell him, after hearing Jon Stewart's monologue, really kind of tearing up the president, the Iranian author said, by the way, if you were in Iran, you'd be put to death based on what you just said. So that's why it's being attacked. And Jon Stewart fell backwards and went, what do you mean I'd be put? He goes, based on what you just said, that's simply not allowed where I come from, and you'd be jailed or put to death immediately. So that contrast says a lot. That degree, that's why we're there. And the other one is the Iranian national soccer team for women who are playing in Australia. Well, they refused to sing the Iranian national anthem, and now they're being the government has demanded they fly back to Iran, and they're going to be put in prison because they wouldn't sing the national anthem. Will Australia step up and keep them in Australia, or will they send them back to a life of prison, assuming that, let's assume there's not regime change. So we're in the middle of a political moment that is kind of fascinating. I wonder what Australia is going to do. Will Australia step up and protect those young ladies, or will he send them back to prison? I don't know. It'll be a fascinating one. Aidan took the time to put together a white paper, which I thought was very telling. Aidan, if you want, why don't we jump to you for a second here? What are your thoughts on where we are with the Iran-U.S. situation? And let's jump into the strait and what it means.
Yeah, certainly, Phil. Thanks for having me on today. And it's definitely a multifaceted piece here, but I'll start talking a little bit about the Strait of Hormuz. And it's one of the most important energy choke points in the world because it connects all of the Persian Gulf to global markets, and it serves as this main export route for oil from all these major producers. If you just take a satellite type view, its narrowest point in the channel is it's just 21 miles wide. So that's narrower or shorter than the average distance for a marathon, 26 miles. So in roughly 1/5 of global oil and liquefied natural gas and supply move through this corridor. So it makes it this just like critical artery for global energy systems. And you know with the tensions rising and the tanker traffic slowing, we've talked about this. Market prices are reacting quickly. As we talked about, Brent pushed up above 100, about 118, 119. It's now dancing around 100. WTI is dancing around 95. So we've seen the prices pushing up, but the strait doesn't have to physically close just to disrupt supply. It's insurers, and they raise their war risk premiums, and then ship owners like hesitate to transit the region, except for that one Greek ship that turned off its transponder and flew through and ran and cut run
Five.
like
They
a
snuck
shot.
five through. Tell
Five
that
through.
story. Yeah, George Prokopu, probably another name. Prokopiou snuck five containers through by shutting off his GPS transponder. So that's how I got. I saw that story. Great
And
story.
I just thought that was wild, just to think about from that perspective. But you just take a step back. The current conflict, more than 1,000 ships right now have been waiting to pass through the strait outside of those five. So it just talks about how quickly this logistical bottleneck tightens global supply. Higher energy prices because of this ripple through the global economy. We got transportation costs rising, manufacturing, consumer costs all going to be floated into this. But in this grand scheme of things, the United States right now is less vulnerable to oil shocks than we were in past decades because we're a net exporter of petroleum. We produce 13 million barrels of oil, 22 some odd million barrels of petroleum condensates, which is several times Iran as well as that region's output. So I think right now, from the supply and where the U.S. stands, it's not in a bad place.
So that's kind of fascinating that even in the United States, one of these we benefited. We have our own oil and natural gas. Have you noticed natural gas prices in the US are up only a fraction, whereas Europe has to import liquefied natural gas because they don't have any. So mostly American suppliers make more money, and unfortunately, US consumers spend a bit more. But the natural gas spike doesn't necessarily affect us so much as it does overseas. And to your point, these containers have to move through there with LNG or oil because if they don't, it's going to put a stranglehold on places like Europe. What do you think this does to the European economy, in your opinion? If it
So
lasts
it's
like which way, but a different question. Who suffers more, the US economy or the European economy in a higher oil environment?
So the European economy would suffer more than the United States, and the reason is because they're an importer of crude and energy as opposed to the United States. So they become the de facto, well, the United States becomes a beneficiary, and the prices continue to rise for those countries that are importing. So it does hit countries like across the Europe, Japan, China. These are countries that are going to get impacted a little bit more on the terms of the cost of this conflict.
So that's reality. And then if this tension, if this issue with the Strait, it's worse, where there really is nothing going through. I know we've talked about US ships maybe escorting them through, US ships providing insurance, to your point. What do you think it does to the global economy? Does this become a recession moment?
Yeah, I mean, so the situation is shift from short-term volatility to a meaningful global economic shock that disruptions to energy flows need to become this sustained and large enough to materially restrict supply. Some of those pressures are already kind of emerging. You saw Iraqi producers reportedly cut output by more than 2/3, as storage filled up when, crude couldn't be shipped out of the country. You're seeing analysts talk about, regional production falling by more than 4 million barrels a day in the near term, and potentially as much as 9 billion barrels a day, if the disruption persists. In other words, that's about 10% of global demand. Again, we talked about oil prices. I've already seen this steep increase since early last week. Briefly moving above $100 a barrel. So the percentage rise is as far as similar to the surge seen at the start of the Russian-Ukraine conflict in 2022. But that was a bit much different time. Financial markets are beginning to reflect those risks. Global stocks outside the U.S. We talked about this down. The EFI you're seeing down 6.5% or so from their pre-conflict highs. You're seeing investors debate whether rising geopolitical tensions spill into the real economy. But ultimately, sustained higher energy prices would just increase costs for businesses and consumers worldwide. And interesting, it's going to complicate central bank policy because it'll keep inflation elevated and limit the ability of policymakers to cut those interest rates going forward.
That's a
Uh,
good one. You think about that, stopping there for a second. In a world where we anticipate interest rate cuts, what if you get cuts because of a weaker U.S. economy? That would be real bad because that means you probably have higher inflation at that point. Well, no, you might have a stagflationary world where you have with higher inflation because of oil prices, but a weaker U.S. economy. Stagflation, there's no way out. You're not cutting or raising. You're kind of waiting. You might have to cut without hoping to
mhm.
spur further inflation, at least to turn the economy around. That's a very tough place to be. We've only had stagflation the United States back in the 70s when we had the last oil embargo. Now,
Yeah,
I'm not calling
Phil,
for
you
doom.
said the other day in the office, and it's spot on, even more so now. But Kevin Morse is the new, newly appointed Fed chair. The last job in the world I would want right now, because now, with a expected, easing interest rate environment, monetary policy easing environment, he's now has to deal with this oil price surge, inflation surge, and you're stuck, as you said. You can't do anything,
Yeah,
right?
he's in a tough spot for sure.
You
Well,
say that,
Aiden,
Ben, you don't, no one's envy the role that Jerome Powell has had to play, for the past, several years here. Probably in the best seat here to just move forward and have a cocktail in the sunset.
Yeah,
for
yeah.
sure. Well, Aiden
Uh,
wrote a wonderful white paper on this conflict. He talks a lot about the strait and what goes through there. We haven't talked a lot about the Suez Canal. I guess that's not an issue yet because that's where the Houthis are. But I guess I assume that that's been tamped down as well. But certainly, we have a scenario where it really is worth getting some factual education. So if you have time, go to osaicresearch.com, and there you'll find our latest white paper that Aiden wrote. It was excellent, very well done, and take some time to read it. Aiden, thank you very much. Any last
Thank you.
thoughts, Aiden, before we move over to Ben?
No, I would just say, if oil prices, are layered on top of, some of the recent weak data points that we've had, this conflict we see could evolve, to more broad market volatility into a bit of a headwind. But there's a piece out from Zacks this morning that just talked about all the most recent wars in, the Middle East, as well as kind of in, the European Asian border there, whether that's the, Ukraine, Russia, whether that's Bosnia, whether that's a number of other conflicts. They tend to be short-lived from a geopolitical oil premium supply, and markets generally tend to resolve themselves. But if we have more sustained 6, 8 weeks of this, we're going to see some broader economic headwinds.
I mean, if you speak to the Russia-Ukraine crisis, the last time we saw oil spike and it reversed right away and became a buying opportunity. It took
Mhm.
a little time, but all of these conflicts generally become buying opportunities. By the way, they're inflationary. Just think of all the missiles we got to replace, and we got to go. Well, you shoot them all off, you got to build new ones. So that's going to become inflationary as well. I think in the end, it does, to Aiden's point, it's spot on. If this becomes prolonged, then we have a different issue. Is there somebody out there who can lead Iran beyond the mullah of the Ayatollahs, in a way that will allow them to have a somewhat of a democratic system? Well, we haven't seen that yet. Hopefully, there's an end game. All right, so we're gonna switch gears for a minute because there's two things I read about this weekend. We've been reading a lot about one, the prediction markets. So I've asked Ben to come in and talk. He did a wonderful white paper on it about a little bit what they are. But I also, before I get in, there's a great piece of speaking about alcohol consumption globally, that it's down 12%. The younger generation is not drinking alcohol. They're turning to cannabis or not drinking at all. They call it the Californication of alcohol. That
Mhm.
because it's so bad for you, the people are drinking less. How about that? We've been drinking since we've been invented as a species. People have been drinking, and maybe it's come to the end. I was shocked to see numerous wineries in California and in France either closing down or considering to close down. So Ben, your generation really is doing some weird things, and the latest one is the prediction markets. Let's talk a
Mhm.
little bit what they are. First of all, when we start, what is a prediction market and why should people be aware of them?
Sure. Yeah. So at their core, prediction markets are exchanges where users buy and sell contracts, often referred to as event contracts, excuse me, that are tied to outcomes of future real world events. So think, election results, inflation readings, will the US strike Iran? Will Taylor Swift announce a pregnancy before, X month or whatever? Literally anything is on the table.
Well, hang on. The one I saw this weekend was great. I read that this week. Did you see the piece about Jeff Bezos attending the University of Miami game?
No.
There was a piece this weekend about Jeff Bezos' son attends the University of Miami. So they wanted to know whether or not he would be at the Super Bowl, actually, whether he was going to go to the Super Bowl. And the problem is how many of the son probably knew whether or not his father was going to the Super Bowl. And there
Mm,
were rampant bets at the University of Miami on whether or not he was going or not. And obviously, the son has inside information. So it is kind of like we've seen a lot of this concern around inside information. It's quite fascinating that did Bezos' son give away some information so his buddies could make some money? I mean, that's just stuff's
mm.
getting crazy. I'm sorry. Go ahead. I didn't mean to cut you off. Go ahead.
No, yeah, I mean that hits on probably the most important issue facing prediction markets right now is future regulation, how these things are treated, and there's not really at the moment anyways, a coordinated effort by regulators to or at least a very strong one that's against insider trading. It's really kind of the wild, wild west at the moment.
So, and what's an example? You're seeing this brand new way to bet on things. I remember
Mm,
when there was a bet on Maduro being captured when or not the president was going to go in there, and it's mind-boggling to me to think that there's a place where you can go and bet on world events, sports events, and everything in between, and earn real money on it. But wasn't there was also some issue with people being paid money back recently that they were on an exchange and they weren't going to get paid money back based on when we were going to go to war, I think, with Iran. So there's a lot of it's a it's the wild west of betting, I guess. Is that a fair way to look at it?
yeah, yeah, exactly. And I mean, those are two separate situations that you were just referring to. One was a mystery trader in the actions against Venezuela. Less than 5 hours before explosions started in Venezuela, this unknown trader doubled down on existing bets that Maduro would soon be out as the country's leader. Um, he netted more than $400,000 in a 12-fold return on this investment. Um, and there are significant indications that point to this person likely being an insider. One being, the size of the trades, the fact that he exclusively bet on this one type of contract, the fact that the account was created not a month before the actions that took place that he made money on. So all of those things kind of indicate that there was probably an insider involved here, and we had, as you point out, another similar situation around Khomeini's death. Um, and the issue with them not getting paid, again, we had, I guess, six contracts identified in this circumstance. I mean, six accounts identified in this circumstance that were likely to have insider information. Um, the pullback here was that both Kalshi and Polymarket, the two biggest players in prediction markets, have clauses in their bylaws and related to their contracts that say that they don't allow transactions directly tied to death. But the way that they phrased it, and mind you, Kalshi promoted this quite actively on their website and on their platform. Um, but they basically admitted when traders weren't getting paid out because they got a green check mark next to their bet. It happened in real life. It should happen and they should get paid out in their account. But that settlement on death issue is what caused them to, first hold up on paying people back, which they did eventually do because they admitted that the post was grammatically ambiguous. It didn't actually say his death. It's just that he would be no longer the leader. And that was like the difference of agreement in the people who took positions and the market.
Fascinating.
So,
It's fascinating.
yeah.
Well, then, when you look today on these sites, how much the revenue is sports betting versus real world events like politics, things we just described?
That what I found was very interesting in researching this white paper is, there's a lot of this conversation around, what prediction markets offer outside of sports betting, economic indicators, music, politics, celebrities, even the weather. But still about, at least in Kalshi's case, the one that is approved here in the United States, Kalshi gets 90% of its revenue and 90% of the activity on its website related to sports betting. Think about, states where gambling is not legal. This is how sports bettors get around that in states where, they're not allowed to bet on either
Ah,
FanDuel or DraftKings or something like that. Polymarket is a little bit different. Again, they're based in the UK. Um, they are the broadest selection. They offer the most contracts of any of the prediction markets out there, and about half of their trading volume and revenue is tied to sports.
no, okay. So still mostly sports, but some of these other odd things are popping up. Maybe there's one about how fast or how long these podcasts are going to go, and people betting on that's possible. How, when you look at that, just to kind of wrap up here, what are some of the concerns about regulating it? Obviously, it sounds like there could be real insider trading issues, which to me would make this unique idea go away. But what do you think?
Yeah, I'd say that's probably the most critical factor facing the industry. We did have a regime change essentially at the CFTC, who is currently in charge of regulating prediction markets. And like I said, Kalshi is approved and active for U.S. bettors or investors. Polymarket at the end of last year did come to an agreement with regulators in the United States, so they will be able to reopen for investors and bettors here. But the new chairman, Michael Selig, appointed by this current Trump administration, he came out with his first public remarks at the end of January, outlining a four-part agenda that basically withdrew prior restrictions, reassessed pending litigation, made plans for new event contract rulemaking, and asserted the CFTC as having exclusive jurisdiction over prediction markets as commodities derivatives. So all of that taken together essentially means that the current administration is solidly in support of these markets for the time being. So I would say look for more clarity on regulation throughout the rest of this year, and also for supportive government regulations and further growth.
I mean, that's really fascinating. In the end, everybody, it's an emerging investment opportunity. I don't invest. I've never made a bet. I don't know if you have been, but the world of sports betting online and now prediction markets, where you can bet on anything you want, is new and different and kind of exploding out there. And it's really a thing. It's really happening. So I think it was fascinating that Ben wrote a white paper on this. When you get a chance again, go to osaicresearch.com and you'll get a chance to read some of this stuff if you're interested. I just think it was a very fascinating piece about where we're going with sports betting and or betting on anything. I mean, betting on people's lives is scary to me, but betting on the length of this podcast each week, I think that'd be pretty funny.
There are actually legitimate investment purposes to prediction markets as well, Phil. Like, beyond pure speculation, it does allow eh, investors to hedge portfolio exposures against certain binary risks, like say an oil spike, or extract signals by treating prices in those markets as like real-time probabilities that are actually backed by dollars, by people who put money where their mouth is.
Politics, my gosh, the political betting around who's going to win and the credence given to it is quite high because these are real people in real states making a bet on who the politician is, which is much better than a poll. People putting their money where their mouth is, they fully believe it. So you're right, Ben. Is there an opportunity to kind of have some pair trading with you've got your stock market bet. What would be the other side of it in case things don't work out? So it does offer a hedge. Fascinating. Read Ben's paper. It's excellent. All right, before we wrap up, we got to do our one fun thing here. We do have to talk about our, most importantly, shout out of the week. So I'll start with Aidan. Aidan, what do you got for me? Do you have one for me? If not, it's okay.
I absolutely do have one for you. Nathan
It
Martin.
can't be a snowblower. It cannot be your snowblower. That's not allowed.
Hey, Aaron's is an American company. We like it. American manufacturing. But it's Nathan Martin. He won the LA Marathon over the weekend in a time of 2 hours, 11 minutes, 18 seconds. He had an epic last 100 or so yards where he caught up to Michael Kamau, and he won by 0.18 seconds. If you haven't
Wow.
had a chance to see the clip, uh, Nathan chases this gentleman down and barely pushes his way through the finish line in the ribbon to win. So just an epic,
What
epic comeback.
nationality?
He's an American. So it was
Oh
the
my
second
God. Oh, so you
back-to-back
said,
years where an American has won the LA Marathon.
wow. That's pretty cool. All right. Ben, what do you
Yeah.
got for me?
Well, I can keep it with sports here. I'll just give a shout out to my Anaheim Ducks and my buddy on the team, Alex Killorn, who netted the closing shootout goal just the other night to win to win the game and put us now 8-0 in shootout games for the year, and we are now leading the Pacific Division. So shout out to Alex Kaloran and shout out to the Anaheim Ducks.
Okay. So we're going to go trifecta in sports here. Mine is to the American Paralympic Paralympians. I mean, I watched some of the events over the weekend. There was a race where folks without legs were racing in a cross country event, and then they're doing the shooting, where they shoot and then they get back and race down the track. I forget what it's called.
Biathlon?
Biathlon, right?
What is it?
Biathlon.
Is it biathlon? Oh, yeah, right. It's biathlon. Oh my God. They were in these chairs and they kind of intentionally fall over, grab a rifle, get their breath, shoot, get back upright and push off again. I mean, Olympians are pretty amazing. The Paralympians are a whole nother level. What they're doing to succeed and participate in sport, I was blown away. So my hats is off to the Paralympians who are out there. And that young lady who won gold for the United States in that biathlon was incredible. She was on a mission. It was something exciting, as exciting as and more exciting than the regular Olympics for sure. And I'll go and I'll say a heartfelt shout out. That's the wrong word. My condolences to the families of the 7 military men and women who have lost their lives in this war. You know, in the end, if we liberate 90 million people and we have it's just a democratic approach in the Mid East, and maybe end thousands of years of fighting or make it less bad. Their lives are hopefully well lost, I guess, or they're lost for good purpose. Let's hope it comes to that end. But if not, certainly my condolences to the family and to those people as well. Gentlemen, thank you very much. Your white papers are excellent. Everybody listen in. Thanks, guys, for joining me today.